Thank you, Thomas, and thank you for highlighting that I'm the person that stands between you and the break. But let's hope this is interesting. I have a quick anecdote because we were talking about wine in China. Last year when I was in China, I was invited to a dinner and I had, they served me red wine. And I thought, ooh, red wine in China, I don't know. And it was excellent. And I thought, oh, interesting, maybe naive European me, I thought maybe this is an import from France or from Italy or something. No, it was Chinese red wine that turns out they had cultivated over years, apparently with input from French expertise. So if the Chinese don't import wine soon anymore, that's also because they can actually do really good stuff locally. But I'm not here to talk about wine. I'm here to talk about what businesses can do in practice to manage geopolitical risk. And before I dive in, I want to say I'm very happy to be here, and we're talking about bad news and good news. And I think the good news for you guys is that when I look at the market from a talent perspective in geopolitical risk management, and I've been working in this market for 15 years, is that I noticed that we have a lot of people that know geopolitics and politics very well, and then we have a lot of people that understand businesses very well, but we really lack the people in the middle that are able to unite the two and to make the link. And so I think this is where you're trying to position yourself and what I hope you will learn over the next year or so, and I can tell you there's a huge need for that. And so I think something very interesting to be built there. That being said, so one of the, and keeping with the good news, I guess, one of the important messages to businesses in this international environment that is evolving so much is that, yes, you can manage it. And so I want to share some of the data that we have at EY on what businesses are doing, maybe not yet doing. And I want to start with one number that I personally find very impressive, which is that we found earlier this year in a survey that we did with more than 1,000 global executives across geographies, across sectors, we found that 77% of them, so this is almost 80%, told us that they had been surprised by more than half of the political risks that had impacted them over the past 24 months. This is the beginning of the year. This is pre all the tariff announcements, etc. 80% of businesses globally surprised by more than half of the political risks that impacted them directly. This tells me, the conclusion is very easy. This tells me that these businesses are not at all well equipped to understand the global environment because, yes, some of these things are complicated to anticipate, but you cannot be surprised by more than half of the risks that impact you. So lots of things to be done. The other thing that we find is that these businesses tell us that a majority of the risks have negative impact on them. Of course, it's very important to always talk about risk and opportunities. There's always the reverse of the medal, but overwhelmingly the current political and geopolitical developments have a negative impact, first of all, and second of all, they're across the different business functions that they are negative. So if I can share some numbers on this, we found that 66% told us biggest impact was on supply chain. I think no surprise between the pandemic and the different wars over the past couple of years. That's nothing new, but what is also interesting to see is almost 60% said reputation and compliance. We had a presentation about sanctions. This is something that's relatively recent. It was something that in an earlier survey we found less businesses had shared that this had impacted that part of the business so much. Finance and tax, growth and investment, data and IP, and you can see this is really going across different business functions. That makes it also very complex because you've got a number of political and geopolitical developments that are then not just impacting, I don't know, let's say IT. So you can't have just your IT guy looking at this. It needs to be really across the business. The good news is that we see companies are starting to act. So literally all of them told us that they have been doing adaptations to their strategic investment plans. They've changed their supply chains, no surprise there again, I think. They have actually accelerated their investment in certain markets. Almost 30% told us that as a direct result of political risk, they accelerated investments. That is mostly, I think, because they're trying to diversify into different geographies. 25% have relocated operational assets. All of these things take time. So you can't say, ooh, invasion, I didn't anticipate, let's go somewhere else. It takes 18 months or longer to relocate your supply chain. So a lot of movement there. And then on average, we see more investment into what we call geostrategy capacity. So this is the internal capacity of businesses, to deal with these political developments. We see that now, for example, 46% say that they're taking geostrategic actions on a regular and proactive basis. This is up from 40% in 2021. That's only a 6% increase. Given what happened in all of these years, I think that is not very impressive, but it's a slow progression. And I say geostrategic actions that are proactive and regular, and that's because a majority of businesses actually still function in crisis mode. So they wait until they're impacted, and then they scramble together a crisis cell, and they try to think through, what should we do now that the crisis has already hit? This is not proactive political risk management. So there's movement. There's also a lot still to be done, that's the second part that I want to talk about a little bit, which is what can companies actually in very concrete terms do about all of this? And of course, a lot of it will depend on the exact developments, on the sector that the business is in, on the geography, etc. But there are basic principles that are very important. And so we draw on the data that we have from these surveys combined with interviews, etc., that we've done, and we've compared what we call the geostrategists, so businesses that are the most advanced in their capacities to manage political risk, with businesses that are not doing it as much yet. And we see really significant differences. So the first thing is that the geostrategists have really adapted their supply chains to geopolitical realities already. So their supply chains reflect geopolitical dynamics much more than the ones of businesses that are so-called observers, so that are not doing as much yet on political risk. Second point, political risk needs to be built into investment decisions. Sounds very simple, I would say. I can tell you a big majority of businesses are not yet doing this in a regular manner. So here again, to give you data, only 34% of the observers do this, compared to 72% of the geostrategists, so almost twice as much, conduct political risk due diligence on a regular and proactive basis when they're investing in certain countries. So that's the second important action that businesses need to take. Third, and I think this is a good theme for this year, prepare for the unexpected. Again, sounds pretty obvious, but we see that geostrategists really excel at what we call scanning. So this is have a profound understanding of the political and geopolitical environment and be able to apply it to the business. Do scenario analysis, use it in a structured way internally. Huge differences here that we observe between companies that are performing better versus companies that are not yet doing this. Fourth point, and I have 5, don't worry. Fourth point, engage the board on geostrategy, and I think this works nicely with the title, but we find that there has been progression on this, also slow, but more and more boards are asking questions, are proactively involved. This is important for a number of reasons, and again, here our data shows of the geostrategic companies that are much more advanced, the board is much more proactive. And then finally, businesses need to determine who has a seat at what we call the geostrategy table. So internal governance, who needs to be involved? Is there ownership of the issue? Geopolitics is an issue where often we see everybody finds it interesting. Everybody has an opinion. But when it comes to it, what happens, who's responsible, who do we talk to when we need to know what's the decision that we're going to take. So is there ownership? Is there clear internal communication about these issues? Especially the big businesses that are across different geographies often have internal access to information in the business functions that sit somewhere in another country, but is there communication with these people? So a lot of big questions about internal governance here, and so this famous geostrategy table. These are some of the very concrete actions I wanted to share. Of course, there's so much more that we can go into, and I'm looking forward to the discussion. But I think the main message that I want to bring to you today is really this idea of, yes, there's a lot of uncertainty. Yes, there's a lot of things that can be changed. No, nobody has a crystal ball, but yes, you can anticipate this, you can manage this. There's clear methodology in order to be able to do this, and there is a lack of skills of people that are able to bring these two worlds together. So looking at you to make that happen even more, and that's where I will stop.